All right, so I have to make another quick update today. I apologize for that, being that I haven't made an update in over a week, but I promise you that this week you will get something more comprehensive, more macro, more of what's to come, big picture kind of stuff. We'll talk broad markets, we'll talk agriculture, we'll cover it all. But for now, we're going to hammer away at uranium, gold, and silver. So just hang tight a little longer. We're going to get back to our true form here soon enough. All right, guys, so let's start with uranium. Since I'm a little late on the update, I'm going to kind of go through a little bit more than I usually would to make up for it and kind of show you the confluence that we're seeing across the sector. So starting with Sprott Physical, I can tell you that as expected, we are getting denied at this resistance here. Now, on the weekly time frame, it looks fine. I think long term, it's showing good health. I don't think there's anything to worry about. And this is true on a lot of the big names like Cameco too. All right, so still long term very bullish. But the key takeaway is that from my last video, nothing has really changed in uranium in terms of the yellow flag, which is to hold or trim. All right, because this is not something that you want to buy right now. All right, this is something that if you're holding and you're up big in the green, you can continue to hold, maybe start taking some profits. I have. I'm rotating into gold and silver now. I have been. And, just wait to see what happens. This is an inflection moment. This is not where you want to buy. You have missed your buying opportunities. So now, if you're looking to get in, if you're not in uranium, don't buy here. This is a wait and see what happens next. It's better to let it run up to $19, fall back to 1681, retest, get the nice signal there, buy signal, and buy it right back here all over again. Don't worry about FOMOing. Don't do that. Just be patient and wait for another buy signal. Right now, there are no buy signals, especially as we go through URA. Getting denied where? The same point, right? This is a pivot point we've been looking forward to since way back here, right? Because we knew this whole pattern would play out and we knew that this would be a key area. And you can see how all of these equities struggle. That's not a surprise. And so as you come up to test this level and get denied, you do so with diverging RSI. Again, you also have descending volume. And remember, this is part of the problem that I have with uranium right now, is that we waited for this run up in volume for such a long time, okay, because we knew it would signal the move. Well, it used all of its energy just getting up to key levels of resistance, right? It used all of its energy to get up just to the neckline on the inverse head and shoulders, right? And then once it kind of broke, you keep getting this descending volume over time. Excuse me, my mouth is dry. And again, you have this divergence in RSI. So it's just not a good look. This is not what a breakout is supposed to look like. A breakout is supposed to look like gradually increasing volume, and then you get your big bump on the breakout itself, not the run up to it like we did here, and we decline over time, okay, as we struggle with resistance. That's not a good look, all right? So again, I reiterate that nothing has changed. Like, you do not buy uranium here. Pure and simple. I don't care. You don't do it. There is no technical signal to do that. There's none, zero whatsoever. In fact, on average, the sector shows some near-term weakness. And so it's just a wait and see. Okay, so if you're green, hold and wait and see. If you're out, do nothing and wait for the next opportunity to buy to show itself. Okay, so we'll go back to Cameco, the big dog, the prince of the sector. Okay, so look, when you zoom out of Cameco and you look at a long-term chart, I mean, this is a bull channel in a bull run. I mean, it is very, very good. It looks very, very healthy on a long-term trend line, all right? So uranium is still bullish, right? It's still on an upwards run. The trend is your friend and the trend is up. So all signs point to uranium being strong, okay? On a long-term level, all right? Until that changes, that's the reality, right? So the key now is, what do you do? Well, again, nothing has changed. You're waiting and seeing, because even on Cameco, I will remind you guys that in my last video, I told you, it's like the one thing that looked good was Cameco, because all the RSI looked good, the volume looked good, everything looked pretty good. It had no divergences. Well, in this week, it now has those things, right? You're getting the same declining volume, you're getting the same divergences, and you're seeing a lot of uncertainty, I think is the right word here. And so my advice last time when I last left you was, look, the bull case would be to let this consolidate sideways on the trend to make sure that this baby's going to hold, right? And you can build up strength. Maybe the RSI cools down. You can generate more interest, find new buyers, and take another run up. That would be the bull case. And I also told you that if it kind of continued ramping up from where it was, the way it's doing, that it probably wouldn't hold, that it'd probably sell back down. And it looks to be the case that that's what it's doing. And it looks like we have a little bit more selling coming. I don't know, a day could bring anything, but the strategy stands is that you don't want to buy here. You just want to wait until another buying opportunity comes. This simply is not it. I have taken myself out of several positions. So I posted this all publicly on Twitter. You can check me out there if you don't already. I post updates there. It's easy to tweet. It's not always easy to video. But I sold out of both Dennison and Encore about a month ago. And here recently, I also dumped several other positions. I got out of Global and I got out of Fission. And I posted the prices that I sold at. And so I am, talking my own book here, guys, and I'm running into gold and silver because the opportunity is a lot bigger there. And I think the price action today is starting to prove that. I think that we're coming into something really big in the near term. And when you see so many mixed signals like we do in uranium, it's hard to really be confident. And if you can't be confident, then, why are you playing the game, right? I mean, you need to be confident. Everything you do needs to be based on confidence. And again, UEC, this has always been a good leader of price direction and relative strength in the sector. And again, on the daily time frame, it used all of its volume, all of its energy to just barely break this neckline, fail, and come up and struggle with holding it. And that's just not a good look. It looks bad. And again, you have this diverging RSI. It just looks weak. I'm sorry. That's the honest take. And I feel like if you're getting anything other than that, then they don't understand or they're misleading you. Uranium could ramp up, 100% next week. I don't know. But if it does, you need to sell it. Okay, that's what I'm telling you, is that if you're holding right now, it's okay to hold, but you need to be looking for an exit, especially if it continues to show developing weakness like it is. These just aren't good signs. Next gen, it's forming its own trend here, its own level of rising resistance, and it keeps toying with it, keeps playing with it. I will tell you that it's a good sign that it made it over the 200. That looks pretty good. So that's a good thing. And the RSI has been a little funky here. So the RSI can fix itself. But again, I would wait to see. Just don't do anything. Just hold tight. Just relax. Energy Fuels, same story. Declining volume, diverging RSI, sideways action. This can be good in the long run. You could get some kind of a sideways down action for a while. That would be good, right? Because then you could put in some kind of flag like this maybe. That would be a good thing. That would be a bull case, okay? And so that's really what you're hoping would happen. You're really honestly not hoping for a massive run up here. You're just not, because if it does do something like that in the near term, I'm telling you right now, based on the weakness it currently has, it wouldn't last. I think you'd see some big sell-off. It'd probably come back and retest right where it started from. So keep that all in mind. But there are, again, some equities that are doing okay. Dennison doesn't have those same RSI issues. The volume doesn't degrade as much. It's okay. Again, even if you come on the weekly time frame, right? Let me move this baby, right? It's okay, all right? It's not great, but it's okay. I mean, I don't see any long-term problems, and that's the thing. I think that uranium looks good long-term still. That hasn't changed. Again, looking at global actually looks really good. It continues to impress. I got out, I think, at 326 here. So the problem is that I think it has a real likelihood of testing this 285 level, just like, say, URNM is going to come down and test the $76 level at a bare minimum. All right, at a bare minimum. Now, if it reacts well, if it shows some very positive signs, if we see some strength on this reaction moment, then maybe I get back in and see what happens. But right now, with the uncertainty in the sector, you really have no choice but to take profit and kind of protect your investments. Now, here with Silex, I've been warning people about this one. On the daily, there's a lot of mixed signals on this stupid thing too. I wish it would just hurry up and sell off and get it over with. And I think it might soon. Even on the weekly, you're starting to see a little something like that, right? That ain't a good look. But it's about 9,000 miles from its 50. Now let's look at this on the breadth, okay? So relatively, you have to go back to July of 2009 to get this far away from your 200. And that was on its way down into a massive sell-off. The RSI is overextended. It has divergence. The price action doesn't look good. It's a bad shape. It's a bad pattern. I think that, I stand by my call that this baby's going to sell off, and it's going to touch this 50 at some point, whether it's here at 208 or whether it takes a month and it's at 250. I don't really care, but it's going to do it. I can assure you that. And I won't be looking to touch it at all until it at least does that. Direct competitor, LEU. Again, this is the weekly chart. Let's see. So on the weekly, it looks all right, right? But you're hitting this clear resistance. We've had this trend line up for 6 months. So that's been a long-standing point of resistance there. But again, on the daily time frame, you are seeing the divergence, all right? And so if this plays out and if you start to sell off, it could leak into the weekly as well. And you're also getting the same kind of ugly pricing action here like this, okay? So that's not a good look. So when you have this pattern, all right, with this resistance, right, where the price is where it is, on diverging RSI, you can't like that. I mean, you can't like that, all right? Because you're showing weakness at a moment when you need to have strength to break through this resistance. And so my guess is that it continues to, it just flushes this out, right? It's going to sell, take a breather. It might come all the way down to 40, right? So that's a 20% sell-off, by the way. Okay, so these are things you just need to keep in mind if you're going to hold. There's nothing wrong with holding. I'm not telling you to dump your bags, but I am telling you to be cautious of what might happen next. And I see downside happening before I see more upside. So that's kind of the summary of my take in the uranium space. I still love it. I'm still a big fan of it. I will continue to hold core positions throughout this long journey as this energy crisis takes place and unfolds. And obviously, the world's going to make its way into more and more uranium over time. But you have to be able to navigate these markets. It's not just going to go straight up. I mean, there's some clear weakness in the charts. SMR, we had some clear sell-off signals here. Excuse me, my mouth is dry. And it's still a little choppy. Again, this is just a wait and see. Don't buy it. Don't buy it. And appreciate that you might come retest this level right here, which from here would be, 10%. So just have that in mind if you want to keep holding it, that it's probably going to do something like that. But yeah, just be patient out there. I will tell you this, is that the spot price is looking good. So the spot price is, let's look at it on the monthly here. Yeah, I don't see any problems with the spot price. It's obviously ramping up, okay? And so this is pretty good. You could continue to see this ramp up. I think that's a good thing. But don't necessarily think that just because this ramps up that the equities will too. They're showing weakness like they are. I've been in gold and silver long enough. You could see a 5% down move in silver and the equities go up and vice versa. So don't make any foolish assumptions on this. The charts are telling you what's coming, and it's higher uranium prices over time, all right? This is clear. But it's also showing you some short-term weakness. So take it all together into consideration for where we are. All right, gold and silver. It's obviously a big day, especially for silver. Obviously, of course, we put out a green flag in the last update to start accumulating in the sector. I think this holds true. I don't think the green flag is graduated to gold. I think we're in the same boat, much like uranium. So despite the nice move, we still have some overhead clearance to beat, okay? So this 2150 level is going to be a big one. You see we have confluence with the moving averages there. We could test and still come back down. But in the short term, we're obviously going in the right direction. My fear is this may have been more of a short squeeze. And so that can give us the momentum we need for a prolonged run. I think here's the deal. You can't go all in yet, all right? You have to just kind of be patient and let this play out and develop a little bit more. Let's try to get to the end of the week and see what happens. Obviously, if this keeps doing this, then, that's a different deal. I don't expect it to, but it could. But I will tell you that, it looks very good to start. But don't be surprised if it comes back down to these lower levels one more time, all right? Because I do see the broad market rolling over. And while my theory remains that when we get this sell-off that's coming, let's say we get a nice sharp sell-off. Well, I think a lot of the bad apples in the cart from the prior sell-off are still out, right? I mean, if you just look at these equities, they're so oversold on historical levels that it's hard to imagine that anybody's gotten back in, right? We're in the basement right now. It's like, I mean, you look at GDX and GDXJ. I mean, this is silly. This is nonsense to be down here. So it stands to reason that not a lot of people have gotten back in, right? So if we do sell off, I think it'll be a bit less extreme than the broad market, especially when you look at these ratios. Look, the ratios are telling us that this is all about to turn around, that the GDX and gold, right, are about to outperform just about everything. And you can line that up across the board. And when you find confluence, like we're finding in the charts themselves, then it makes sense that this is exactly what's about to happen. You can be pretty confident in it. But that doesn't mean we still won't get one more sell-off. So I think even after the spike today, you can still accumulate, right? But that's the key word, is to accumulate. So buy in tranches. So you should have a list of companies that you really like, right? And then you should be kind of sprinkling, right, as you go along, maybe 10% here, maybe 15% here, and just buy slowly. Because in 2 weeks, we might come down and test a level like this. You don't know for sure. So what I'm trying to tell you is that the time is now for gold and silver, and the price action today was a great start. But I'm not sure that this is the moment yet to just go all in, right? There's still some risk of another sell-off here. So get your toes wet, start accumulating. We're green for launch on this thing. The time is kind of running out on it, I think. I think that's pretty evident. But as you look at the charts, we have some near-term resistance to get over in a lot of these equities, okay? And you pretty much see this across the board. So in the case of something like AG, though, this is the weekly chart, we had this same inverse head and shoulders pattern that was built in confluence again with uranium, all right? And uranium clearly got its break. It struggled with it, but it's gotten it. And so it'll be interesting to see now what gold and silver do. But if they can just maintain the trend now that they're back in it, that would be extremely bullish. And so accumulation along these trend lines will be very, very, very wise. So I think we're all going in the right direction here. Let's come into the daily and get some more nuanced detail. Jump up to the 50 on Endeavor. Okay, can we beat it tomorrow? That's the question. We have divergences on RSI. All right, so I think there's short-term weakness, but when you zoom out on the weekly, there's no trouble at all. And that's why I'm saying I think that this move might actually get a bit sold off, and then you'll have a lot of people say, "I told you so. I told you silver, gold, it's just a fake rally. It ain't going anywhere." And you might come down for one more shot. I think that might be what we're looking at here. Okay, so give it time to maybe trade sideways a little bit, maybe dip a little bit, but be accumulating all along the way. Save some cash in case we get a nice sharp sell-off. And remember, guys, look, if we get some kind of a massive sell-off in this thing, all right, in gold and silver equities, from where we are right now, listen, whatever would come that would cause such an event will be exactly the reason why you'd want to own gold and silver in the first place. Okay, so don't worry about it so much in terms of price. Think about it more in terms of time, because in terms of time, we're here, right? We are effectively here, right? We're at the start of this thing, okay? And so, even if you bought GDX at $25 and it pulled one of these maneuvers on you, clearly it's going to bounce right back, right? And I am very confident that if we did get a sell-off, it would look just like this, right? So even if it did get 20-30% red on you, right, which is a possibility you always have to consider, I don't think you'd have to live through it very long, right? It's maybe a few days, maybe a week or something like that, right? Because whatever it is that would cause that, people are going to be running to gold and silver, no doubt about it. The fear trade will be on. All the setups are all still there, okay? So if there's anybody new to this channel, look, let me point out these confluences to you. 2018, all right, we have triple confluence of support. We have confluence of levels of being oversold, and we have confluence of levels of breadth, right? Extreme oversold levels, all right? And they all line up, and you can do this equity after equity after equity after equity after equity after equity. I mean, let's go back up to just the ETFs, SIL, right? So look at this. You have to go 2020 to get this far in breadth, right? So that sell-off in March 2020, look how steep it was. Look how sharp it was. And it's still only just as oversold as we are now in terms of breadth. we are so oversold, people don't appreciate it. They really don't appreciate that where we are right now is effectively here, okay? And you can go through this one after the other after the other. I'm actually on the daily chart. If I were on the weekly, it actually all lines up better. So look, you're getting this 2020 level again, and SILJ, you're finding the same points of confluence in the ratios. It's here. I mean, this is here. This is where you want to be accumulating and buying. There's no doubt about it. So just be confident. All right, man. You know, I wanted $14 on PA so bad, and it came down to $14.40. And you know, I was a little bit too greedy on it, but we might get another chance. So don't FOMO here. You just accumulate. Okay, accumulate wisely, slowly. Start getting your position set, and just know that in terms of time, this is developing very quickly. And you know, a day. Look at what happened with these Japanese restarts and uranium. Okay, and ever since they got them, they struggle with the move. You get a day like that that affects the gold and silver market, it's not coming back. All right, there's going to be a clear difference. It's like it ain't coming back. Look at Agnico Eagle. Okay, look at the confluence here, 2015. You see these dates all the time, 2015, 2018. We are so synchronistic in where we are in these charts, where we are in time, where we are in these ratios that, you know, I will say it again. This is a green flag for gold and silver. You need to be buying. Everything looks good, but don't be surprised if we chop sideways or come down and test one more time in the lower bound in some kind of a broad market sell-off, because I do think the broad market is getting overextended. It was oversold, but it really has no basis to go up. Okay, so once we sell back down, we break 3,600. That's going to be a big deal because it sets a secular bear market in play. And that's when things really start to turn. That's when things start to settle in for people. Like, we really are going lower, okay? And then the dynamic of everything changes. And this mechanism is on its way, okay? This dynamic is on its way. So, again, there's not a whole lot to say other than it's green flag go. Everything looks good in the medium long term. Just in the short term, understand that this might not be the move yet, right? We might not catapult to the moon right yet. But it is imminent. It could be anytime, any day. Just be accumulating wisely, okay, and slowly, and keep some cash in the event of some kind of crazy sell-off. And even if the crazy sell-off doesn't happen, then if it starts taking off and it starts headed to the moon, then in an event like that, it's okay to chase anyway. So don't worry about it. Your cash will be valuable either way. So don't FOMO. That's the key thing. Don't FOMO. There's plenty of love here in gold and silver for a long time. This trade will play out over years and years and years, and we'll navigate the whole way through. But look, you don't have to FOMO anything. You're at the bottom. Okay, you're at the bottom right now. All right, and so just be excited for the opportunity that you have and appreciate it when you see it, so that you can have the confidence to strike.